everyone, let's get into it. I'm Lincoln from the Buckner Project video on financial literacy. Today we're talking about the FDIC, the Federal Deposit Insurance Corporation. They basically insure money. So let's go into the definitions. Pause the video, write these down. These are important. These are what you're going to be talking about today and the next day and the next day. These are important words. You guys need to memorize them. So first up, we got bank run. So this is when too many people try to get their money at once. If you've seen the movie It's a Wonderful Life, all these people, they go to this bank and they're like, hey, we want our money back. And the bank's like, we don't have your money. Like we've talked about in previous videos, right? They don't have the money at them at all times. They loan it out. They give it to different people. So the bank's like, well, we don't have your money. Like, well, we want our money. So what happens is the bank declares bankruptcy and they have to give their creditors back different amounts of money. So that's a bank run. It's bad. The FDIC was put in place so this doesn't happen. When the people think that something's bad is going to happen to their money and everyone goes and tries to get their money out of the bank. Next is insurance. So insurance is what the FDIC does. They're insuring up to $250,000 at every bank of your money. So this is so bank runs don't happen. And this is in most banks in America, and it's pretty common. You probably want to put your money into a bank that's FDIC insured. And then the reason why the FDIC was put in place was due to the Great Depression. And this is when all the people did these bank runs, and then the market lost all of its value, and then America was very poor for a very long time. And the FDIC had to come in and stop that. And the New Deal was a set of programs in which the FDIC was introduced that basically created an end to the Depression. Well, it did have its drop-offs and pitfalls. It overall helped the Depression. Now, what is the FDIC?
Okay, so the FDIC is a corporation that insures commercial bank deposits, which means that when you put your money into a bank, they insure the money that you put into that bank so that when there is a run on banks, you don't lose your money in that bank. And the goal of it was to increase confidence in banks by the American people, because after the Great Depression hit, everybody kind of lost confidence and didn't really want to put their money back in banks because it was lost, and there was a huge doubt among the citizens of the US. But ever since the FDIC was put in place, people have been able to put their money in banks with a lot greater confidence than previously. But it didn't insure investments such as stocks and bonds and mutual funds or annuities. So no federal law mandated FDIC insurance for banks, though some states required their banks to be FDIC insured. So there could be banks that don't have FDIC insurance. Having a bank without FDIC insurance is hard to come by, and you do not want to put your money in that bank. So please don't do that. But stocks and bonds and any additional investments are not insured. It's just the money that you put directly into the banks. They insure up to $250,000 in each bank. And there are loopholes that people often use in this, but we will not discuss those right now.
The FDIC was founded June 16th, 1943, as part of the Banking Act, a part of Franklin.
No, I can do it.
Deal. What else was in this New Deal? Because this deal sounds pretty big. What else was in it?
It was a series of federal relief programs and financial reforms aimed at pulling the U.S. out of the Great Depression. There was the SEC, Securities and Exchange Commissions.
The SEC is basically like the regulatory agency of the stock market. So let's say you're Enron and you're pushing money and cooking the books. So I'm the SEC, and you're like, hey, there's something a little off about this whole Enron thing. So I'm going to look into it, and bam, it's a Ponzi scheme. So the SEC is the regulatory agency of the market.
When the Depression hit, Americans everywhere quickly took money out of federal banks, and those that were too late just lost their money. So because of this, a lot of Americans didn't have jobs. Unemployment was up 26% in 1930.
Today's terms, 26% would be 65 million Americans. That's a lot of Americans.
A lot of people were not able to provide for their families, so it was a really tough time for a lot of people. And without the FDIC, people likely wouldn't have felt secure in putting their money back into the same banks they had previously lost their money with.
Let's say you want to put your money into a piggy bank, and you go up to your parents and you say, all right, I'm putting this money in my piggy bank, but what if my brother steals it? What if my sister steals it? That's not very fair. So they'll be like, all right, well, we'll insure up to 25% of your money. So we're going to insure 1/4 of whatever you put in there. If you lose it, we'll pay it back. and the rest, that's up to you. So that's essentially what the FDIC does. You can try this at home by just backing up whatever you have. So let's say you want to do this with candies. You get a bunch of Skittles and you're saying, all right, I'm putting the Skittles in my candy jar, and for every 4 I eat, I save 1. That's similar. It's not the same thing, but it's the gist of what the FDIC was. And that would be an example of what you can do at home. So let's go back to the definition. So just everyone has a rundown on it. So bank run. Too many people give their money out at once. That's like It's a Wonderful Life. Everyone goes to the banks and they're trying to get it out at one time. Insurance, an amount of money that's backed up by an organization. So you can have life insurance, you can have car insurance, you can have house insurance, all this type of stuff that's backed up by an organization. And then the Great Depression was this economic crisis in the 1920s that kind of set the world into a recession. And then the New Deal was what was set in place by Franklin Delano Roosevelt, FDR, as many may know him, to cure the Depression. So that's really all we have. Thank you guys so much for supporting the Buckner Project. Thank you all so much.